Hello friends, I'm C. Meena Verma, and in today's session we will discuss the chapter number 6. I hope I'm audible, visible, and the screen is visible to all of you. Please tell me the screen is visible. So the chapter which we will cover in today's session is decision making. Okay, so see, in this chapter, you will find that there are two things mentioned in the introduction of decision making. You can see here that it is something which is related to CVP analysis. Okay, and then the second topic is short-term decision making. Now, let us first understand they have started the chapter with CVP analysis. What is the use of writing this word CVP analysis here? Okay, and on the basis of CVP analysis, they are doing many things. Okay, now let us first understand what is CVP analysis. I hope that you people are aware of this CVP analysis, and you have studied about it in your CA Inter. Okay, the CVP, yeah, now okay. Okay, let me do one thing. Okay, leave it. Okay, see, CVP analysis is also known as break-even analysis. Now, let us first understand what is the CVP analysis. I hope you all know about break-even analysis. We all have studied about this concept in our CA Inter syllabus, but how the CVP analysis is related to strategic cost management, this is what very important to understand at this place. How and why is this CVP analysis, why is this break-even analysis, how it is related to short-term decision making? And since we have studied in chapter 1 that in strategic cost management, we don't take decision considering the short-term perspective. Now here we are taking short-term decision. We are studying here about short-term decision making. Now how it is related to strategic cost management? Okay, we will study about it, that how short-term decision making is related to strategic cost management, and what are the changes we have in new syllabus, since you know that the same subject you have in your old syllabus also. Now how, what are the changes in your new syllabus, and how this because we have to relate everything with strategic cost management, so how this decision making is related to strategic cost management. Okay, now first let us first understand what is break-even analysis, since we are studying about smart concept. Okay, so let us first understand how break-even analysis, how CVP analysis is related to strategic cost management. See, we all know that before starting the production, it's very good to know that if you know everything in advance, that what will be your cost. Okay, like if you are producing a good, for example, you know that in strategic cost management we prefer to do production. In strategic cost management we prefer to do production. Wait. In strategic cost management, we prefer to do production on pull system. Okay, we prefer to do production on pull system. Now see, we are producing the goods on the basis of the demand uh, done by customer, the demand which are done by customer, on the basis of which we do production. Okay, now in this, now here, what if we know in advance that what will be our variable cost for doing the production? We can estimate that, and we will find the selling price, and for this we will study the next chapter how to find the selling price. So we will find the selling price, we will consider the variable cost, we know some fixed costs which we have in our organization. Fixed cost, what if we know that these will be my variable cost, this will be my fixed cost, and in order to recover these costs, how many quantity I must sell to my customer. Okay, see, on one side I'm considering that I will do the production on the basis of the demand made by the customer, but on the other side I also want to know that how many units should I produce or how many units I will sell to my customer, so that I can recover the variable cost as well as fixed cost. Okay, so this is what we have studied in break-even point, that in break-even analysis we study about the unit which you can sell in the market in order to recover the variable cost and fixed cost. Okay, so here we have the concept of CVP analysis, which is also known as break-even analysis, which is related to break-even analysis. Okay, now I hope you know all these things, so I don't want to discuss it much in detail. Okay, so see, in this chapter, we will study about the activity-based CVP analysis under condition of uncertainty. Wait, this is not working actually. Let me change the slide. So in decision making, we will consider the break-even analysis. Okay, means how many unit we must sell in order to recover the cost. Okay, now we will study first about the activity-based CVP analysis. What is the activity-based CVP analysis? We will study about it. Okay, then we will study about the CVP analysis under condition of uncertainty, and then CVP analysis under service and non-profit organization, and CVP analysis in just-in-time environment. Okay, so now let us first consider the CVP analysis, activity-based CVP analysis. Okay, let us first consider this topic. See, my pen is not working in the slide. I don't know what problem is there. Okay, let me use this. So see, let me discuss this topic. See what happened in break-even analysis. In case of break-even analysis, what happened in case of break-even analysis? We are trying to find out the number of units which you want to sell in order to recover all the cost. Okay, so here we consider the fixed cost. We consider the fixed cost at this place, and then what will we do? We will consider the selling price and variable cost, means the contribution per unit. In this way you can find out the break-even point, means the number of units at the break-even. Okay, so you can find it at this point. You can find the break-even point. This is what you have already studied in your CA inter syllabus. Tell me whether you have studied this or not. I hope you have already studied this. Okay, now in case of activity-based CVP analysis, what happened? They are saying that this fixed cost in your organization, generally what happened, we consider that this fixed cost will vary as you increase the number of units. They said that this will vary on the basis of number of units you produce in the organization. Okay, if you will produce huge quantity, then the cost per unit, the fixed cost per unit will be less. And if you will produce less number of units, this fixed cost per unit will be more. Okay, so they are saying that generally what happened, this fixed cost vary with the number of units. Okay, if you will do lot of production, this will be less. Okay, this is what we have studied in CA Inter. Now, in case of activity-based CVP analysis means we are doing the break-even analysis, but here what will we do? We will divide this fixed cost into two parts. One part is the fixed cost which will vary with the number of units, and another part which we will try to find out the fixed cost which will vary with some cost driver. Okay, like setup cost, area covered, like any other cost driver, you will find that, and on the basis of that you will consider the fixed cost. So first way is that you will find that you will first try to find out how this fixed cost vary with different cost driver. Okay, and on the basis of which you will bifurcate this fixed cost. Okay, for example, if my fixed cost was 70,000, I will find that how this fixed cost vary with setup cost. Okay, how this is varied with the number of area or employee cost or some other way. Okay, so in this way, first I will divide it on the basis of the cost driver. And if it is not possible to further bifurcate it, then I will consider the fixed cost on the basis of number of units. This is what activity-based CVP analysis is. Okay, this is the same concept which we had in CA Inter. But what is new here? The new thing is here that we will bifurcate this fixed cost on the basis of we will divide this fixed cost on the basis of the cost vary with the cost drivers. We will try to find out that, and accordingly we will bifurcate them. Okay, now let us see what we have in our syllabus. See, they have already mentioned you here that for the break-even point, what will you do? You will consider the fixed cost at this place. What will you do? You will consider the fixed cost. Okay, and then what will you consider? You will consider the fixed cost which vary with some cost driver. Okay, like you know that out of this fixed cost, this is the setup cost and it will vary with number of setups, or out of this total fixed cost, these are the engineering costs which will vary with number of engineering hours. So in this way, what will you do? You will bifurcate as much as possible. You will bifurcate these fixed cost on the basis of some cost driver. Okay, so this is something new which we have here. This is something new which we have here. Okay, now we have this numerical, and I want all of you to please read this question, and I will give you enough time first to do at your own. Okay, first try to do this numerical at your own. What is the requirement of the question here? Compute units and production runs Catalyst Limited should produce in order to reach the break-even point. Okay, so here what happens, you have the current situation and you have the proposed change, and in case of proposed change you have to find out first the number of break-even point, the number of unit at break-even point. First you have to find this. So I hope you all know about the break-even point, so I will give you time to please read this. Now please read this question and try to do this at your own. If you have any doubt, you can ask me. Otherwise, I want all of you to please first read this question at your own. Okay. First, read this question at your own. I expect all of you. See, very easy question. You have current situation, and they have suggested you some changes, so new situation arises in your organization. Now what will you do? You just want to find the break-even point, and for finding the break-even point you need to find the fixed cost and how those fixed costs are bifurcated here. Okay, you have to consider that, and after considering all those things you will find here the break-even point. Please do this question and let me know if you have done this question. There is some problem in my slide, so meanwhile I'm checking that problem. This question is in your book also, so you can see your book also. Please read this question. Please read this question, and if you have done the reading portion, please let me know that you have done the reading of this question. It's a very easy question. What you have to do, what you have to do. Okay. Please quickly tell me if you have done the reading portion of this question. Please quickly tell me. Please read this question. Tell me if you have done the reading. Let us discuss. I hope you have done the reading of this question. Let me discuss this question with you. Please tell me you have done the reading of this question. Please tell me quickly if you have done the reading of this question. Okay, now let us understand this question. See what we have information here, information which is related to current situation. The information which we have here, which is related to the current situation. The information which we have related to current situation is selling price. Selling price is given. Okay, the direct cost means the variable cost is given here. Then we have given the present number of setup per production period. Okay, present number of setups is given for the current situation. This is 42. And then we have cost per setup, which is 450. And in proposed system, this cost per setup is reduced by 90. So what will we do here? We will do 450 minus 90. Okay, 450 minus 90. What will we do here? 450 minus 90. Okay, what else we have here? We have production unit per run. In one run, the number of units they are producing is 960 at current situation, and in proposed system, they are producing 1008 unit in one production run. Okay, engineering hours for production period is 500 for the current situation, and 422 for the proposed system. Okay, the cost per engineering hour is given, which is 10 rupees. Now, what information we have? The company has begun activity-based of fixed cost, and has presently identified two cost driver. Okay, so at present, since we have already discussed what we have to do, we have to find out the break-even point here. Okay, for the proposed system, for the new proposed system, new change. Okay, for finding break-even point, what we need to do? We need to find the fixed cost and the contribution per unit. Now, in order to find the fixed cost, what will we do here? For finding the fixed cost, in case of break-even CVP analysis, we will first divide this fixed cost on the basis of the cost driver which we have. Okay, so they are saying that there are only two cost drivers. So on the basis of those two cost drivers, we will first divide the fixed cost which we have in the organization. Okay, what are those fixed cost driver here? The production run and the engineering hours. These are the two cost driver which we have. Okay, the production run and the engineering hours. Okay, now the total fixed cost of the organization is 96,000. Okay, see, this value will be 360. I'm writing it here. This value 450 minus 90 will be 360. This value will be 360. Okay, now what we have to do, they are saying the total cost of the organization, the total fixed cost is what? 96,000. The total fixed cost is given here. Now we have to divide this fixed cost on the basis of the cost driver. We have only two cost drivers. So first we will find the fixed cost on the basis of these two cost driver. Okay. Now they are saying that after considering the above information, the fixed cost will remain 7 to 100. 7 to 100. 72,100 means they are saying that if you will consider the two cost driver, first is related to production run and the second is related to engineering hours. Okay, if you will consider these two cost driver, production run and engineering hours, after considering after bifurcation of the fixed total cost on the basis of these two cost driver, we will left with fixed cost of 72,100. 72,100 fixed cost. Okay, now they are saying there are changes as proposed above for the next production period for the same volume of output. Now we have a very good information given here and we will use this information. They are saying that in case of proposed change, as mentioned above, in case of this proposed change, for the next production period, the volume will be same. The volume of output will be same. So first we will try to find out the number of units which we are producing here in the current situation. The number of units which we are producing here in the present situation. You can see here that in one production run, we are producing 960 units. Okay. So we have to find, and we have here that in present situation, the number of production run is 42. We have number of 42 setup, and in each setup, in each run, we are producing 960 units. So now we have total, in case of proposed system, how many total unit you are producing in one production run? It is mentioned here that the total unit which you are producing in one production run is this. Now first, let us find the number of unit which we are producing in one run. In one run, wait, there is some problem in my laptop today. In one run, we are producing, how many units we are producing? 960 units. So for 42 runs, how many units is required to produce? 960 into 42. Okay. So these are the total units which we will produce. These are the total units which we will produce here in the proposed system, 960 into 42. These are the total units which we will produce in proposed system. Now we have to find in proposed system the number of setup. We know that there are in one setup we are producing in proposed system 1008 units. It is mentioned here that in one production run we are producing 1008 units, and we have the total units which we are producing. It is given here in the question that we will produce the same total outputs. Okay, so the units which you are producing here, we will produce in proposed system the same number of output. So the total unit we will produce is this. Okay, we will divide this entire value with 1008. So in this way, we will get the number of setup. Okay, so here we will get the number of setup. We have setup cost. So this will be one fixed cost. Then the engineering R is mentioned for the proposed system. And the cost per engineering hour will remain same. If nothing is given, we will consider it same. If nothing is given, we will consider the same. So for the proposed system, we have the selling price, we have the variable cost, and we have considered those two fixed cost which is related to some cost driver. Like it is mentioned in your question that they are saying that one fixed cost is related to production run. We will find that, and we will find the cost incurred with because of which, and then we will consider the engineering hours, and on the basis of which we will consider this fixed cost. Okay, can you do this question now? Please give me the answer of break-even point. I want all of you to give me the answer. I'm waiting for you. If you have any doubt, you can ask me, and I'm waiting for you to give me the answer. Can you do it now? Okay, I have. Yes, you have done the reading. Yes, ma'am, got it, the same values. Okay, so can you do the calculation? I'm waiting for you to do the calculation. What you need to do, since, see, I have some problem in my laptop today. My Word file, in my Word file, I'm not, I can't write actually. And see, I can't switch the page also. There is some problem. I will deal with this, but I think I have to erase it. Please write all these information somewhere in your book so that I can erase it. Okay, I need to erase it because there is some problem in my laptop. I have to switch the page. I need to switch the page. I can? No. Oh. So these are the information which we have. I will not delete it because I will use these information. Now see here, the fixed cost which we have, fixed cost. One is related to production run. Okay, production run. Okay, how can you find it? Now you will first find here the number of production run. Give me answer. The value of number of production run in proposed situation. What will be the value of production run in proposed system? And then we will multiply it with the cost of one setup or one production run. The cost of one setup or one production run is 360. It is mentioned. Okay, so in this way you will get the value of fixed cost. Okay, due to production run, due to one cost driver. And another is related to engineering hour. Another fixed cost is related to engineering hour. So we will consider the number of total engineering hours we have in the question. We will consider that, which is here 422 in proposed system. So we will take that value 422 in proposed system, and cost of each engineering hour is 10. And then after considering these two fixed costs, we will left with value 7 to 100. So in case of numerator, you will get these three values. Okay, these three fixed costs. Okay, so here we can see that two fixed costs are on the basis of the cost driver, and one fixed cost is not mentioned. So we will consider this as they change with volume. Okay. And then what will we do? We will divide it with contribution per unit. I want you to do this question, then I will solve it. Okay. So I want first of all, you people to do this question and give me the answer, then I will do this question. Okay. Please do this. And give me the answer. In numerator, you will write the fixed cost, the production run, the cost on the basis of production run, the cost on the basis of engineering hours. Okay. So in numerator, you will consider all the fixed costs which you have, and in denominator, you will consider the contribution per unit. And in this way, you can find the break-even point. Tell me quickly the answer. Okay. I'm waiting for all of you to do this at your own. And I think there is some delay also in receiving your answer. Okay, I got answer from Anjali. Anjali from Punjab. Yeah. I want other student also to give me the answer. I want other student to give me the answer quickly. Quickly give me the answer. Quickly give me the answer. In numerator, you will consider the fixed cost. In denominator, you will consider the contribution per unit. Okay. And in this way, you can find the break-even point. Okay. Then after finding the break-even point, you need to find the production run at break-even point. Okay. See, what is requirement of the question? Compute. What is the requirement of the question? Wait. The requirement of the question. The requirement of the question is compute units, means break-even units, and production run, catalyst for the catalyst limited. Okay. So what are the units and the production run catalyst limited should produce in the change scenario, in the new scenario for break-even. So you have to find out the break-even point, and at the break-even, you need to find the production run. Okay, so for finding the production run, first you will find the number of unit at break-even point. Then you will divide it with the production unit per run. You will divide it with this. Okay, so in this way, what will you get? You will get the number of production run. Okay, give me the answer quickly. Okay, I got the answer from Anjali and from Ambika. Okay, I need more answer. Please give me answer quickly. It's very simple question. So I want all of you to give me the answer. See, Ambika, your answer is correct, but I think the answer of Anjali is not correct. Anjali, your answer is not correct. Please find out the reason why your answer is not correct. I want other student to give me the answer. Anjali, your answer is not correct, beta. I want other student to give me the answer. Okay, tell me quickly, do you want me to do this question? Okay, let me do this question for all of you. Let me do this question. Okay, we are trying to find the break-even point for the proposed system. Okay, break-even point in units for proposed system. Proposed system. Okay, so the fixed cost we have here is, what is the value of fixed cost? The fixed cost we have here 7 to 100. Okay, the number of setup we have here 40. Okay, and the setup cost is 360 plus the engineering cost is given here for each hour. The engineering cost is rupees 10. Okay, how this 10 and the number of engineering hours for production period is 422. So in this way we will bifurcate the fixed cost and then we will divide it with contribution per unit. So it is mentioned here the contribution. How will we find the contribution? We will consider the selling price and then the variable cost which we have. So the selling price we have is rupees 10 and the variable cost we have is rupees 5. Okay, so in this way, after considering these information, you can get the break-even point, which is nothing but 18144 units. Okay, this is the break-even point. Okay, for the proposed system. Now they're asking you to find the production run. If this is the break-even point, these are the number of units which is required to produce in order to recover the variable cost and fixed cost. Okay, all the cost. In order to recover all the cost or these costs, in order to recover all these costs, you need to produce these units. Why are we using this activity-based CVP analysis? Because now it is more easy to take decision. Now it's more easy to analyze the situation. Okay, instead previously we were just considering the fixed cost, which we were considering that this will vary with the volume. But now we are considering that there are many costs. These costs can be further bifurcated and they vary with these cost drivers. So now we can consider that if we are producing these units, okay, these number of units, how these units are related to this cost driver, likewise, it is very easy to analyze the situation now. More better way to analyze the situation. Okay, now we are trying to find out the production run for the proposed system. In proposed system, we are he is saying that not able to calculate. What is, can you explain your problem you have? You're not able to calculate it. See, this question is from CA Inter. It's a very easy question. Okay. First, you need to consider all the fixed costs which you have. Okay. Right now, they have bifurcated this fixed cost on the basis of these two cost driver. Okay. And after bifurcating this fixed cost, they are left with this amount of fixed cost. Okay. See, we have done nothing. We have considered all the information which we have in the question. In the question, they have already specified you that there are two cost drivers. Now you don't have to apply your brain to find out the number of way you can bifurcate these fixed costs. You don't need to consider that, because in the question it is mentioned that there are just two cost driver. Okay, so you don't need to apply your brain in order to find out the number of way you can bifurcate these fixed costs. You don't need to do that. Okay, you can explain me your query, Neil. I'm not getting you. Okay, I hope this is clear to all of you. I think I can erase it now. Is it clear to all of you? Shall we proceed forward? Tell me quickly. Okay, if you're asking me that how this 40 value is here, it come here. See, we are producing the total number of units 42 into 960. These are the total number of units which we are producing, and in each run we are producing these units. So out of total unit, in each run we are producing 1008 units. So in this way we can get the number of production run or number of production setup. Okay, we can get the number of setup here. Okay, so here 40 is the number of setup. Okay, 450 minus 90 is 360. The cost of each production run is given here. The engineering hours is given for the proposed system, and the cost per engineering hour is also mentioned here. So in this way you can consider all the fixed cost and then contribution per unit. Okay, in this way you can calculate the break-even point. Is it clear? No. Okay, Neil, you are asking me that in the question it is mentioned that the total fixed cost is 96,000. See, it is mentioned in the question. Read the question very carefully. It is mentioned that the total fixed cost is 96,000. Out of these 96,000, you have to bifurcate it on the basis of two cost driver, 1 and 2. You don't know the value. Okay, they have just mentioned you that out of these 96,000, you have to bifurcate these fixed cost on the basis of two cost driver, and what will be the value is not mentioned here. Okay, then after considering these two fixed cost, you will left with the value of 7 to 100. And see, if you will add these three value, you will get the same 96,000 value. If you will add this, all these three value, I think you will get the same value. Okay, I hope it is clear now. Tell me, Neil, it is clear to you? Okay, it is clear to all of you. Okay, so remember, this question is very easy. This question is same as what you have studied in CA Inter, but now what we are trying to do, we are trying to bifurcate the fixed cost on the basis of the cost driver. Okay, and for that you don't need to apply your brain. In the question they will mention you that the number of cost driver on the basis of which you have to bifurcate it. Okay, or some other information will be given in the question, and on the basis of which you will bifurcate these fixed costs. Neil, tell me whether it is clear to you or not. Now, because I have to erase it, so please tell me if it is clear so that I can erase it. There is some problem in my laptop today. Okay, I can erase it now. I hope it is clear to all of you. Okay, so it is clear to all of you. Now, some other information. Advise whether Catalyst Limited should continue to break up the remaining fixed cost into activity-based costing. See, it is mentioned here. See, you don't need to confuse yourself. It is mentioned here. It is mentioned here, the company has begun activity-based costing of fixed cost. Okay, they have applied the activity-based costing on fixed cost and has presently identified two cost drivers. Since the company has identified only two cost drivers, okay, of the total fixed cost, presently the total fixed cost is this, and company has identified two cost drivers. After the above, see, remember this line is mentioned here. After the above means after considering two cost driver, the cost will remain this. Okay, so I hope Neil it is clear to you. See, after 96,000, out of which you will consider two cost driver, and after considering these two cost driver, you will left with value of 72100. Now, what they are asking you, advise whether Catalyst Limited should continue to break up the remaining fixed cost. Now we are left with this remaining fixed cost. Okay, 70 to 100. They have just identified, since it is mentioned here, the company has identified two cost drivers. It might be possible they can identify more cost driver. Okay, so they are asking you whether the company should break up the remaining this fixed cost further on the basis of cost driver. Okay, they're asking you whether the company should continue to break up this fixed cost further on the basis of cost driver, means activity-based costing. Tell me yes or no and give me the reason why the company should break it further. Give me the reason. Why not the company should break it further? Give me the reason. Give me the reason quickly. Why the company should break it further? Why don't the company should break it further? Whatever is your answer. If yes, then why? If no, then why? Give me the answer quickly. I'm waiting for you to give me the answer. I hope, Neil, it is clear to you. So it is mentioned here, it is clearly mentioned that the total fixed cost is this, and the company has presently identified two cost driver, and after the above means after considering these two cost driver, you will left with this value. Okay, which need to further analyze. Okay, I hope you got this point. Shall we proceed to next question? Yes, tell me whether the organization should further bifurcate this cost or not. Tell me quickly. Give me the answer quickly. I think there is some delay. I'm not receiving any answer. Whether the company should further bifurcate this cost or not. Tell me quickly. Whether the organization should further bifurcate this cost or not. Say yes. Yes, you are not giving me answer, or there is some delay in receiving the answer. So I'm giving you the answer. Yes, yes, I got the answer from Ambika. Okay, she's saying yes, because it would bring more accurate costing system. Yes, it will help us to analyze the condition in more better way. So it is good to further these remaining 4 to 100 remaining fixed costs. It is better to further bifurcate it. It is good to go. Okay. Now let us do the next topic. Okay, I hope I managed to do this. Okay. Now let us read the next topic. I will cover this later on because there is some problem in my laptop. So I want to correct that first, then I will do that question. Okay, now we have this question. Again, this question is related to CA Inter. Okay, so good. This question is again related to CA Inter here. Break-even analysis or CVP analysis related to service sector, means they are applying the break-even analysis or CVP analysis in service and non-profit organization. So the question which we have here is related to service sector. Okay, this question is related to service sector. I want all of you to quickly read this question and tell me if you have done the reading of this question. Quickly read this question and tell me once you have done the reading of this question. So we have this question. Okay, the question is small. We have this question. Very easy question. And I want all of you to read this question once. Okay. I think you have already done the question related to service sector in CA Inter. So I think you can read this question, and I think half of the question you can do at your own. Okay, what is the requirement of the question? Calculate a suggested fare per passenger kilometer taking into account. See, half of the question is same as you have done in CA Inter. I think I should take this question later on. Okay, I will do this question quickly. See, it is mentioned here in the question that you need to calculate the fare per passenger kilometer. Taking into account the markup cost is 20% to cover the general overhead and to cover the profit. Okay, this is very easy question. What will you do in order to calculate the fare passenger kilometer? For that, first you need to calculate the total cost in the organization, and you will divide it into two parts. Okay, you will consider this and you will divide it into two parts. First is your fixed expenses and next is your running expenses. Okay, next is your running expenses. So out of this, you will first try to find out the fixed expenses you have in the organization. Okay, now let us read this question. Expert Roadway Service Private Limited is planning to run a fleet of 15 buses in Birpur city on a fixed route. Okay, so the company is running 15 buses here. It is given here. The company is planning to run 15 buses. Company has estimated a total passenger kilometer per annum. For all 15 buses, it is given the total passenger kilometer per annum for all these 15 buses is given. And they have also mentioned here that it is estimated that bus will carry 100% load factor, means all the seats will be occupied. Okay. They have given the purchase price of the bus, the life of the bus, and the scrap value. So you can calculate the depreciation here. Depreciation is nothing but fixed cost, fixed expense. So you can write the depreciation. You can find the depreciation value and then you can write the depreciation at this place. Okay. Now further information we have, the sitting capacity of the bus is 42. The sitting capacity excluding a driver seat. Remember, always read the question very carefully. They are saying that bus has capacity of 42 and this value do not include the seat of the driver. Okay, it is mentioned here. Capacity of a bus excluding the driver seat. So this 42 unit will not include the seat of the driver. Each bus can give mileage of 5 kilometer per liter. Okay, the fuel cost is this. So from here, you can consider, you can find out the fuel cost. From here, you can find out the fuel cost. Okay, do you want me to calculate the fuel cost? See, how can we calculate the fuel cost? For finding the fuel cost, we need to first find out the number of kilometer one bus is traveling. Okay, one bus is traveling, the number of kilometer one bus is traveling. So in the question, it is mentioned here, the total passenger kilometer per annum is 25185. This is the total passenger kilometer. Okay, per annum for the 15 bus. So if you will divide it with 15, you will get the passenger kilometer for each bus per annum. Okay, now let us consider that we are calculating this value for per annum on per annum basis. Per annum basis. Okay, we are calculating this value for the entire year, 1 year. Now the bus, for one bus, they are traveling this much passenger kilometer. Now in denominator, we have to minus the number of passenger they are carrying. Since they have 100% load capacity, 100% load capacity, so it is mentioned that 42 seats are there. But one more information is given here, that the company is paying this salary to the driver, and there are two attendant in each bus. You know, there are some attendant in the bus. So in any case, these two attendant will occupy two seats. Okay, so it means that though there are 42 sitting capacity for this, for the passenger, there are 42 sitting capacity, but out of those 42 sitting capacity, two seats are booked for whom? For the attendant. Okay, so passenger can sit only in 40 seats. Okay, so we will divide this here. Passenger can sit only in 40 seats. Okay, we can divide it here. Okay, so in this case, we can get the kilometer traveled by each bus. What we have done, out of the passenger kilometer, first we have find the passenger kilometer for one bus, because it is given here that this is the total passenger kilometer for all 15 buses. Now first we will calculate the passenger kilometer for one bus. Then what will we do? Then what we will divide it with number of passenger, those who are traveling through this bus, from where you are collecting the fares, you will divide it with that. So after that, you will get the number of kilometer traveled by each bus. You will get the number of kilometer traveled by each bus. Okay. Now, why we are finding this number of kilometer? Because we want to find out the fuel cost. It is mentioned here that for 5 kilometer, with the help of 1 liter, you can travel 5 kilometer. Okay, first you tell me this value, then we will calculate the fuel cost. Give me the answer. Give me the answer, this value, the kilometer traveled by bus, quickly. Neil, I will get back to you, your query. I will take your query later on. Please give me the number of kilometer traveled by each bus, quickly. Okay, 41975 kilometer. Okay, this is the distance which is traveled by each bus. Okay, now it is mentioned here that the mileage of the bus is 5 kilometer per liter. For 1 liter, the bus can travel 5 kilometer. Okay, so we will find for traveling 41975 for traveling these kilometer. How many liters are required? The mileage is 5 kilometer per liter, so kilometer per liter. So these are the liters which is required per annum, and the fuel cost is 60 rupees. So out of these liter, we will multiply it with 40 rupees. So in this way, you will get the fuel cost. Okay, you will get the fuel cost. Okay, I got the answer from Ravi Teja. So in this way, you will get the fuel cost. Okay. Other student? Okay, now it is mentioned here that, can I erase this information? Can I erase this information? I hope you have done this portion and you have noted somewhere. The company is traveling. See, I'm writing it here. The company is See, I'm writing it here that the one bus in each year, one bus is traveling for 1,141,975 kilometer. Okay, one bus travel this distance, 41975 kilometer. Okay. So now I'm erasing this portion. I need space to do this question. Okay, now we have the fuel cost. You have given me the fuel cost. What is the value of fuel cost? Give me this value. This value is 554,070. Okay, this is the fuel cost which we have here. Now let us read it further. Okay, now we have the information which is related to cost of lubricant and sundries per 1,000 kilometer would be 3,300. Okay, so for 1 kilometer, this cost of lubricant. Now we are trying to find out the cost of lubricant. Again, this is a run cost, variable cost. Okay, for 1,000 kilometer, this value is 3,300. For 1,000, this value is 3,300, and the bus is traveling this distance 41975. So in this way, you will get the lubricant cost. Okay, give me the answer of lubricant cost. Quickly, I want all of you to do this. Okay, you have given me the fuel cost. Now give me the lubricant cost. I hope this is clear to all of you. It is given here that for 1,000 kilometers, the lubricant cost is this. So what will be the lubricant cost for the entire per annum? Give me the answer quickly. What will be the cost for the entire year? Quickly. What will be the lubricant cost here? This is 138,517. 0.50. Okay, I'm ignoring that. 0.50 you can write. So this is the lubricant cost. What information which we have further? Company will pay salary to driver. Now see, the salary to driver is 27,500 per annum, and the salary to two attendant. We can take it here also, fixed expenses. Okay, they have taken it at okay, so you will take the salary. See, for this, I want to tell you one thing, that for one bus, the cost of driver for one bus, the cost of driver, the cost of two attendant is fixed. Okay, but for entire organization, this may vary. If the number of bus they will increase, this cost will increase, and if they will decrease the number of bus, this cost will decrease. Okay, so therefore they have taken it at this place. So the cost of salary to driver and to attendant. What is the salary to driver? It is 27,500 per month. So you will multiply this value with 12 because we are doing the calculation for per annum. Okay. And the salary is same for the two attendant. Okay, so you will take the same value for the two attendant also. What will be the total value here? Give me the answer. This is the salary for the driver as well as two attendant. Okay. So what will be the answer? Tell me quickly. Okay, I'm writing it because we don't have enough time. 330. Okay, this is the salary to the driver. Now further, what information which we have here? The insurance. Insurance is fixed in nature. Insurance is 55,000. Then we have garage charges. Garage charges. Garage charges is 33,000. Okay, and repair and maintenance. Repair and maintenance will come here. This will be 55,000. This will be 55,000. Then further, what information which we have here? Route permit charges is 5,500 for 20 kilometer. And then for additional 5,000, you have to pay 2,200. So since we have 41,975 kilometer, okay, 41,975 kilometer, these distance. For 20 kilometer, the cost will be 5,500. And for remaining 5,000, and for the remaining, for the additional out of 20,000, for the additional every 2,200, the cost will be 5,000. So you can see here that how many additional distance they are covering. You will multiply this with that. Okay, tell me the value here. Sorry. For every 5,000 kilometer, they are paying this. Okay, so see, let me do this. See, for 20 kilometer, 20,000 kilometer, they are paying 5,500. Okay, then for next 5,000, how many distance left here? 21,975 distance left. Okay, and for this, for every 5,000, they are paying 2,200. So how many 5 will come here? 5 times. Okay, so you will multiply this 2,200 into 5. Okay, so in this way you will get the permit charges value. Okay, considering these value, you will get the value of permit charges. Considering these value, you will get the permit charges value. Okay, this is 16,500. Ravi Teja is saying. Okay, so in this way, you can find the total cost of the organization. Then you will do the markup. Markup is what? It is mentioned 20% of cost. And in that, and after considering the markup, you will get the total fare, okay, which you want to recover here. The value of total fare which you want to recover here. You will get that. I hope you understand this. Is there any query related to this? So in this way, if you will add all these value, you will calculate the depreciation here considering these 3 value and then all these 4 value. After considering them, you will find the total cost. In total cost, you will add 20% of markup. After that, you will get the total revenue which the organization is earning. Okay. From these from one bus, okay, per annum. We have calculated this for each bus. Okay, so the total revenue the organization is earning from each bus. Now what happened? What is the second requirement of the question? I hope it is clear to all of you. Tell me the total value quickly. The total value you will get after considering the depreciation, insurance, garage charges, then fuel cost, lubricant cost, salary of driver and two attendant, and then permit charges. Okay, permit charges. Give me the total value quickly and do 20% markup. Okay, I got answer from Ravi Teja. Other student, I want all of you to give me the answer. Okay. Now see, in this way, we will do the 20% markup here. Okay, and after 20% markup, you will get the total revenue. Okay, and in this way, this is the calculation which you have done for 1 year for the present situation, and then they have given you that you have to find the same thing for the next 2 years. Okay, it is given here, the transport sector of Birpur is highly regulated. The government has fixed the fare at the rate of rupees 1.35 for next 2 years. Okay, the government has already regulated the fares which you can collect from the passenger, those who will travel through these buses. The fare is fixed. Okay, for the next 2 years. Okay, so you cannot increase the fare per passenger. Now they are saying that though the fare is fixed by the government, but there is inflation of 8%, and because of which the cost will increase. Now, what are the costs? The cost which will increase in next 2 years. This is, you have to do the calculation for the next year and next to next year, means first year and then the second year. You have to do the same calculation for next 2 years. And in case of next year, depreciation will not increase. It will remain the same. Depreciation will remain the same. But yes, insurance charges will increase by 8%. Okay, insurance charges will increase by 8%. This garage charges will increase by 8%. This fuel cost will increase by 8%. This lubricant cost will increase by 8%. The salary of the driver and two attendant will increase by 8%. Okay, and the permit charges will increase by 8%. So in this way, due to inflation, these costs will increase. Okay, but depreciation will not increase. Okay. So I hope you can do this. You can do this. Do you want me to give you time to do this question? Okay, you have already calculated. Now, can you? I hope you can do this calculation for the next 2 years. I will leave this, and you can do this later on. Okay, because we don't have enough time, and we have to discuss the other question also. Okay. Now see. I hope your answer is same as written here. Okay, they have given you the total revenue. We have calculated the total cost per annum. In that, we have added the markup, 20% markup, and from where we get this total revenue value. Okay, now after considering this total revenue, what will we do? We have to calculate the same things, the same value for the next 2 years. We have to calculate the same value for the next 2 years, but we will consider what 8% inflation. We will consider that for the insurance, for the garage charges, but not for the depreciation. This will remain same. We will consider the 8% inflation for the repair and maintenance, 8% inflation for lubricants and sundries, 8% inflation for fuel cost, salary of driver and two attendants, and route permit charges. We will consider that. Okay. And from these value, for the next year, again 8% inflation. From this to this, 8% inflation. Again 8% inflation. Okay. Not for this, not for the depreciation. For repair and maintenance, yes, 8% inflation. For cost of lubricant and sundries, yes, 8% inflation. For fuel cost, 8% inflation. For salaries of driver and two attendant, 8% inflation. For route permit charges, 8% inflation. So in this way, we will get the total cost as we have under the present situation, as we have calculated. Okay, so this is the total cost, but markup, we will not apply the markup in next 2 years. 20% markup, we will not apply here. Why? Because it is given that the revenue is regulated by the government. So it will not increase. Revenue will remain same. So whatever revenue you have calculated here, this revenue will remain same. It will come here. Okay, revenue, sorry, the revenue which you have calculated here will remain same, and that will come here and at this place. Revenue will remain same, and it will come here and at this place and at this place. So after conceding, see, the revenue is same and the cost is increasing. So obviously the profit is decreasing during these 2 years. Okay, next 2 years, the profit is decreasing. Why? Because the revenue remains same, but the cost is what? Increasing. Cost is increasing, revenue is same. So obviously the profit is decreasing. Okay, so you can see here that the profit to total revenue in the first year was this, and the next year is this. Why? Because the revenue is the profit is decreasing because the cost is increasing, but the revenue is same. Okay, so I hope it is clear. This is what we can write in analysis. This is what we can write in analysis. Okay. Okay, Ambika is saying, ma'am, can you explain the fuel cost? Yeah, I can explain it again. No problem. I hope this is clear to all of you. Let us find out the fuel cost again. How can we find the fuel cost? See, it is given in the question that the mileage is 5 kilometer per liter. Means in 1 liter, the bus can travel 5 kilometer only. Okay, so this is the mileage. Now we have already calculated the total kilometer traveled by each bus in 1 year. It is given 4,1. What is the value? Can you tell me? The total kilometer traveled by bus, the value is 41975. The one bus in entire 1 year will travel this distance. And in 1 liter, the bus can travel only 5 kilometer. Okay, so in 5, if we will divide it here, 5 kilometer, we will get the total liter. The total fuel in liter is required per annum. We will get that value. Total fuel in liter required in entire year. We will get that value. And then we will multiply the total liter with the cost per liter. It is given in the question. I think it is 60. I'm not sure. Let me see that. The fuel cost is 60. I hope it is 60. Okay, you can see the fuel cost, whatever is the fuel cost, you can write it here, and you can, sorry, the cost of petrol or diesel per liter is mentioned in the question. You can write it here and you can find out the fuel cost. Okay, I hope it is clear to all of you and you have done the calculation at your own. Okay, I want all of you to do this at your own. Okay. Okay. Now, I hope it is clear to all of you. Now, what are the further information which we have here? Any other requirement? No. You can comment. They are asking you for the comment. You can comment that since the revenue is same and the cost is increasing every year due to inflation, the profit will decline. Okay, now for increasing, and you cannot do anything because the government is regulating the revenue, you cannot increase the revenue. So in this case, you can do one thing. You should try to find out the way to reduce the cost, because you cannot increase the revenue. You are already working on full capacity, okay, 100% load factor. So you cannot, and you cannot increase the revenue. Revenue is fixed by the government. So what you can do in order to increase the profit, you can do one thing. You can try to find out the way to reduce the cost. Okay, whatever strategy you want to apply, you can apply, and you can find out the way to reduce the cost. That's it. This is the only way to increase the profit. Otherwise, the profit will decrease. Okay. But yes, after say 1-2 year, if the government will stop its regulation of regulating the fare of passenger after 2 year, it might be possible you can increase the revenue in next 3-4 year. Okay, you can increase your profit in next 3-4 year if the government will stop their regulations on you. Okay, so that is different thing. I hope it is clear to all of you. Okay, now let us do the next topic. Okay, I have many topics to cover today. Now let us do this question, or I will do this question later on. Let me discuss this first. Then we will do the question which we have. Okay, we will do that question later on. If you have any query, you can ask me. Otherwise, let us do the next topic. Okay, now next topic is your CVP analysis. The next topic which we have is CVP analysis in just-in-time system. Since we are studying this strategic cost management, and so we should understand how it is related to just-in-time system, obviously, since we have already studied about the lean system. Okay, and we already know that now every organization, they are trying to shift themselves to lean system, to they are trying to follow the strategic cost management instead of following the traditional cost management. Every organization is trying to follow strategic cost management. So if the organization is following the strategic cost management, obviously they will implement the lean system or just-in-time system within their organization. So how we can apply this break-even analysis in just-in-time system? So for that, we will do nothing. We will try to find out all the fixed cost. Okay, and we will try to find out the contribution per unit. And in this way, we will get the break-even point. But here, for finding this fixed cost, we will try to bifurcate this fixed cost on the basis of the cost driver as much as possible. In order to do analysis in much better way, we will try to find out the way to bifurcate this fixed cost. Okay, we will try to find out the way to bifurcate this fixed cost. Okay. Now, in case of just-in-time system, there are some points which we have to note. What are those points? They are saying that in case of just-in-time system, the labor cost, we know that the direct labor are generally variable cost. We consider them as variable cost. But they are saying that in case if you will apply just-in-time system, in that case, this direct labor cost will be fixed cost, not a variable cost. This will not be a variable cost. This will be a fixed cost. Okay, if you will apply just-in-time system, this will be a fixed cost, not a variable cost. Okay. And they are saying that, yes, this direct labor will be fixed cost, and though the material cost will vary with the production, so material cost will come under variable cost. Okay, so they are talking about this fixed cost. In this fixed cost, they will cover the direct labor cost also. Okay. And since you are applying the lean system, so there are no chances of waste, scrap, or quantity discount. So you will not consider all such thing. Okay. And they're also saying one more thing, in case if you will apply BATS just in time system. So I think you have already studied, we have already discussed this, that in just in time system, we produce the goods in one flow, one by one, means there is no chance to produce the goods in lots. We have already discussed. We don't do production in batches. We don't do the production in lots. We do production on one by one basis. Okay. So there is, if you will apply the lean system and you are doing the break-even analysis in lean system, then there will be no batch system, no setup cost. There will not be any kind of setup cost if you will apply this just-in-time system. Okay, if you will study this break-even analysis in just-in-time system. So, though we don't have any numerical about this concept, though you don't have any numerical in your book, but yes, we have the concept and question can come from this concept also. Okay, so you should apply your brain, consider this fixed cost. You can bifurcate these fixed costs on the basis of the cost driver. But yes, always consider the labor cost will remain the fixed cost. Okay, so this is a new point which we have. We have not discussed this anywhere in CA Inter, that the direct labor is a fixed cost. Okay, this is not we have discussed anywhere. Okay. So this is about break-even analysis in case of what? In case of just-in-time system. Now, the next topic. The next topic is, wait, this is very interesting topic. I want to discuss this, then we will do all the numerical. Short-run decision-making. Now, see, I want to relate everything with strategic cost management. Why, ma'am? Why you want to relate everything with strategic cost management? Since we have this concept, we have this new subject, so we should know the relationship between every chapter, and we should know that why, though this topic we have studied in traditional costing, and now why are we reading the same topic in strategic cost management? Okay, so first question will come in my mind, that why decision making we have studied in old syllabus in traditional costing. Now the same topic we are studying in new syllabus in strategic cost management. So is there any difference? Is there any difference between this old syllabus? Now, one question will come in my mind, whether I can do the question of old syllabus. Is the concept is same, the chapter name is same, decision making. So I think the question and the concept will be same. But no, dear, the question is not same. The concept is little different, and I want to tell you all about that. Okay, and how it is related to strategic cost management, I want to tell you about it. Okay. See what happened. There is a big difference between them. I want to take a page here, and then we will consider this. What is the difference here? What is the difference we have here? See, I'm considering both traditional cost management. I'm so sorry. Today I have some problem in my laptop. I can't write it. Okay. If you have any doubt, you can ask me. And think about it. Why this decision making is in new syllabus? Why in strategic cost management? Why is this decision making? Can you answer me why this is the same subject which you have in traditional costing, and now the subject is in strategic cost management, traditional cost management, strategic cost management. Now see here. See, generally what happened, in case of traditional cost management, we know that the traditional cost management is focused on short-term perspective. Short-term perspective. Okay, we know that the traditional cost management is a short-term perspective. Now, we are studying strategic cost management, and we have studied in strategic cost management that we are trying to take our decision considering the long-term perspective. Okay, we always try to take the decision for the organization considering the long-term perspective. Okay. So I think there is a clash. If you are studying strategic cost management and you want to take the decision considering the long-term perspective, long-term perspective. Now see, there he's saying one point, that if though you are taking here decisions, see what actually difference between, what are the difference between traditional and strategic cost management. We have studied already here that we take the decision considering the financial factors. We just consider the financial factors, whether this is financially good or not, we accept that, we just consider that. And strategic cost management, we consider both the financial factors and the non-financial factors, we consider both. And then after considering the financial and non-financial factors, we take decision for the business organization, we consider both. Okay, now how this decision making which we have studied in old syllabus, okay, how this is different from the new syllabus. See, we are saying that though we are taking the decision in short-term basis, okay, but still these short-term decisions will affect our long-term survival. Agree or not? My small step, we have already studied in Kaizen costing. Small step will result in big change in the organization. Small steps matter a lot. So we are saying that if you are taking even any kind of decision which are based on short term perspective, means you are just considering 1 year some information, you are taking the decision, okay, some short term, that decision will also affect your long term perspective. So while you are taking your decision on considering that short term, okay, short term information, you should consider the picture of long term perspective also. How this short term will affect my long term survival. Why? Because we take the long term perspective in order to stay competitive, ahead of my competitor. Why I always want to take my decision considering the long term perspective? Because I want to be ahead of my competitor. Okay, and for that I need to consider the long term perspective. Now they are saying even if you are taking the decision on the basis of short term, okay, you should keep in your mind that you are taking this decision for the long term survival of the organization. And this is what we have already studied, that if you are taking the decision considering the long term picture, considering the long term perspective, you should consider not just financial factors but also the non financial factors. It means that while you are taking the decision for your organization, don't just consider whether this proposal is good financially or not. We generally in traditional cost management, we take decision like that, whether this project is financially good or not. If it is good, accept it. If it is not, reject it. Generally this happen in traditional cost management. But in strategic cost management, we will consider, yes, financially this is good. Now let us check whether non-financially this proposal is good or not. Okay, why we are considering that non-financial factors? Because every decision which you will take in your organization, even though that will be short term, but that will affect your long term survival. Definitely it will affect your long term survival. And so you should consider and you should take your decision accordingly. So you can see here that there are difference. The question which you will study in old syllabus in decision making and the question which you will study in strategic cost management, they are different, they're not same. Remember, they are not same. Okay, while we are taking short term decision, but we should keep in our mind the long term perspective also. Remember, not just the financial factors, but the non financial factors. Okay, and then we will take the decision for the business organization. Is it clear? Tell me. Ma'am, is it mentioned somewhere in book? Yes, it is mentioned. Let me show you. If you want to write anything, you can write it. And you want me to show this in your book? See, let me show you. These are the points. Oh, wait. These are the points which we have here. Wait. Yeah. Delete it. Okay, let me, if it is not mentioned. Okay, if you will read these pointers, since I have done the editing, but I think there is some problem, so it's all gone. Okay, let me underline that. See, See, they are saying short-term decision making, how it is related to strategic decision. Okay, we know that if you want to take strategic decision, you should consider the long-term nature, because that will give you competitive advantage. So even if you are taking short-term decision, you should consider the long-term perspective in your mind in order to take the decision for the organization. And for the long-term decision, you should consider the non-financial factors which are mentioned here. Okay, you should consider the non-financial factors also in order to consider the long-term survival of the organization. Okay. Now, what are the points? More points mentioned here. First, let us consider what are the non-financial factors we have. Non-financial consideration, we will consider whether whatever decision you are taking, whether this will increase the customer satisfaction or not, whether it will increase the employee satisfaction or not, whether the organization is following the corporate social responsibility or not. The organization will consider whether it will increase the brand name, goodwill of the organization or not, whatever decision you are taking, whether this will increase the brand name of the organization or goodwill of the organization. We will not do anything. Even sometimes this happen, na, this proposal is good financially, but if I will take this proposal non-financially, it might affect my goodwill, it might affect my brand name. Okay, so I will consider the non-financial factor also. I will take only those decisions which will increase my brand name, my goodwill. Okay, I will consider that. I will consider the environmental factors also, that my decision will not affect the environment. My decision will not affect the customer social responsibility. I will consider that. Okay, I will consider my own ethic, business ethic. You all know that we are a chartered accountant, we are professional, and ethics applied on us also. Similarly, on doctors, professional ethics applied to them also. Similarly, for any organization, they should follow the ethics. Okay, and accordingly they should take the decision. Okay, sometime it might be possible that financially some proposal is good, but while if you will consider the non-financial factors, that proposal will not be good. So financially in short term it might give you revenue, it might give you profit, but in long term it might affect your goodwill, your brand name, and ultimately that will affect your long term profitability. And we are always trying to increase our long term profitability and survival, and accordingly we should take the decision for the business organization. So I hope you people understand how this chapter in strategic cost management is different from traditional cost management. Tell me, it is clear or not? You want me to repeat anything? Is it clear? Say yes or no. Quickly. Yes or no? It's clear? Okay, one more point I want to discuss, then we will do the questions. Okay, one more point I need to discuss. This is the same point which you have studied in old syllabus also, which I will discuss here. Okay, the same point which you have studied in old syllabus also. Okay. So we are taking the relevant, we call it as relevant costing. Okay, decision, short-term decision, we call it relevant costing also. Now here, what will we consider? For example, we are taking some decision related to some proposal. Okay, we are taking decision which is related to some proposal. In that case, we will not consider the cost which we have already incurred. Remember, the cost which you have already incurred, okay, which is a sunk cost. You will not consider the sunk cost, which you have already incurred in past, okay, and which is not at all related to your proposal. You will not consider that. So you will ignore all the past costs which you have incurred in past, which is irrelevant, and it's a sunk cost for the organization. Okay, now next is what? If you will take decision related to any proposal, for example, you have two proposal, proposal 1 and proposal 2. You have two proposal. Any cost which is same for both proposal, for example, any cost like driver salary. For example, I'm considering driver salary. It is same for proposal 1 and proposal 2. Any cost which is same for two proposal, we will not consider that. Okay, we will not consider that. Okay, this is the second point I told you. Third point which I'm telling you. Third point. For example, this is my entire organization. This is my entire organization, and I'm incurring my fixed cost for my entire organization. Okay. I'm incurring my fixed cost for my entire organization, and now I'm considering some proposal like proposal 1 and 2. And I have to decide which proposal is better, 1 or 2. In such case, I will not consider the fixed cost of entire organization. I will only consider the cost which is related to these proposals. Okay, the future cost which is related to these proposals. I will consider that only. Okay, I will consider the differential cost and we will not consider the sunk cost. Is it clear? Tell me quickly. It is clear or not? Okay. So we will not consider the past costs which we have already incurred. We have already paid for that. Okay, we have already give the money. Okay, so we will not consider the past cost. Okay, sunk cost. We call them sunk cost. We will not consider that. If we are considering any proposal, we will consider only those costs which are different for the proposal. We will not consider the cost which is same for both the proposal. We will not consider that. Okay, any cost which is same for both the proposal, we will not consider that. Cost which is same for both proposal, we will not consider that. Okay, and the third point is that, for example, I have any cost which is required for the entire organization and we are analyzing the future cost of some proposal. So we will consider only the cost which is related to future cost of the proposal. We will not consider the fixed cost of entire organization. Okay, I hope it is clear to all of you. I hope it is clear. Now I want all of you to read this question and we will do this question. A very good question. If it is not readable, let me divide it into some parts to make you readable. Okay, we have this question. This is the question which we have, and remember while doing the question, what? We will take the decision considering the financial and non-financial factors both. First, we will consider the financial factors, then we will consider the non-financial factors. We will consider both of them, then we will take the decision accordingly. Read this question. And if you have done the reading, let me know. Read this question. Read this question. Quickly read this question. And if you have done the reading of this question, please let me know. Okay, read this question. What will we consider? We will not consider any past cost, any costs for which we have already made the payment, any past cost, we will not consider them. They are sunk cost. Okay, they are sunk costs. We will not consider that. Any cost which is same for two proposals, we will not consider that. Okay, so accordingly, try to first read it and try to understand. First read it carefully, read it. Read this question, and if you have done reading of this question, please let me know. Please let me know if you have done the reading of this question. Give me the answer, okay? Write it that you have done the reading, okay? Read it and tell me if you have done the reading of this. Quickly tell me you have read. If you have read this, quickly tell me that you have done the reading of this question. Tell me you have done the reading. Please tell me quickly if you have done the reading of this question. Okay, so let me read this question. If you have not done, okay, you have done the reading. Very good. Okay, now let me read this question again for you. Okay, recently, Ministry of Health and Family Welfare, along with Drug Control Department, have come hard on healthcare system for charging exorbitant fees. You know that the hospital, they charge a lot. Okay, so the Ministry of Health, they were trying to regulate them, and they become strict on them for charging high fees from the patient. Okay, now there is a hospital, Human Healthcare Limited, which is a leading integrated healthcare. Okay, they provide health related services, is a company which is feeling pinch of measure taken by authority. Now they are not happy with this decision of the health Ministry of Health. Okay, this company, this hospital is not happy with the decision. Okay, and why they are not happy? Because see, no matter the hospitals are, if they are private hospital, obviously they want to earn profit. Okay, so if they will regulate their price, then obviously if the revenue, if the fare per unit, or if the revenue from per patient, okay, the fees from per patient, if they will regulate it, obviously it will reduce their profitability, okay, it will reduce their margin, okay. So they are saying that they are facing margin pressure due to this, okay. HHCL is operating in a competitive environment. The company is operating in competitive environment, okay. The environment is very competitive and they are operating in competitive environment. So it means that there are many hospital around them, okay. So it means what? It is difficult to increase the number of patients. If the organization want to increase their profit, see, the organization want to increase its profit. There are two ways to increase the profit. Either increase the revenue, fees per patient, okay, either increase the fees per patient or try to increase the number of patient. Okay, now see, they are saying that you cannot increase the fees because the fees is regulated by the government, and you cannot increase the fees and you cannot increase the number of patients. Why? Because there are a lot of competition in the market. There are many other healthcare services, many other hospitals, because of which you cannot increase the number of patients. Now you cannot do na ki you are spreading some disease and you are increasing your customer. We can't do that. Oh, they can't do that. Okay, so they can't increase the number of patients. Now what they have, what are the point they have in order to increase their profitability? How can they increase their profitability? See, profit is nothing but sale or fees or revenue. Fees minus all cost, you will get the profit. You will consider the fees, you will subtract the cost, you will get the profit. Now here you cannot increase your fees, means you cannot increase the revenue. Now if you want to increase your profit, you have one point: try to reduce the cost. Okay, and this is what the organization is trying to do. They are trying to find out the way. See, this is what we have already discussed. If you cannot increase your revenue, you should try to find out the way to reduce your cost in order to increase the profitability. And the same thing the organization is doing here. The management consultant of the company has come out with some plan for cost control and reduction, and therefore the organization is coming here. They're trying to find out the way to reduce the cost, to control or reduce the cost. Okay, now HHCL, this health provider, provides treatment under package system where fees is charged irrespective of day a patient stay in the hospital. Now, generally what happen, if the patient admitted in the hospital charge amount on the basis of the number of days the patient is admitted to hospital. Okay, if he will admit it to 10 days, accordingly the charges will be. If he will admit it to 15 days, accordingly the charges will be. Okay, but now they are saying that they are not charging on the basis of per day, they are charging on the basis of package. Okay, they are introducing package system. They have a package system actually, and generally they were estimated that if one patient will come, he will stay in the hospital for 2.5 days. One patient will stay for 2.5 days. Now, in order to reduce the cost, they are trying to reduce this stay of the patient to 2 days. Previously, what happened? They had a package system, and one patient generally stay in the hospital for 2.5 days. Now they are trying to reduce their stay from 2.5 days to 2 days. Okay, they are trying to reduce this time from 2.5 days to 2 days. Okay, by doing this, consultant has targeted the general variable cost with the help of this. See, previously 2.5 were the patient day. Now they have reduced it to 2 days. So they are saying they are reducing this 0.5 days. On that, they are reducing this variable cost. The variable cost is rupees 500. So while reducing the patient per day in the hospital, they are saving this variable cost. Okay, with the help of this, they are saving this variable cost. Okay, I hope it is clear to all of you. It is clearly written here that they have a package system. Previously, the package was for 2.5 days. Now they have introduced the package for 2 days. So in the new system, they are saving 0.5 days, and the variable cost for each day is 500. So for the saving in variable cost will be the value which you will calculate here. Okay, this is the saving. I hope it is clear up to this point. Now, annually 15,000 patients visit to the hospital for treatment. Okay, so you will multiply this with the 15,000. You are saving this money from the 15,000 patient. Okay, medical superintendent has some concern with that of consultant's plan. According to him, reducing, now there is some problem. See, medical superintendent, he has some concern. This decision, the hospital the hospital management consultant want to take this decision for reducing the cost, while the medical superintendent, he is of the concern that, what is the concern? See, remember, I want to highlight this with different color. Let me highlight this with different color. What are their concern? They are saying, according to him, reducing the patient stay would detrimental to the full recovery of the patient. Remember, this is not ethical. This is not an ethical point. He is saying that there is requirement to admit the patient for 2.5 days. And if you will remove the patient without fully recovery, because you want to achieve your target, you will remove the patient from the hospital within 2 days. In this way, it might be happen the patient you have removed from the hospital will not be fully recovered from the disease. It might be possible that the patient is not recovered and you asked the patient to go home. Go, now you are okay. Though the patient is not recovered and you know that the patient is not fully recovered, he need more time to stay in the hospital and take medication and treatment from the hospital, and you ask the patient to move out of the hospital. Okay, so in this way, what happened? This will increase the dissatisfaction of the patient. Patient will again fall ill and he will come to the hospital again. Okay, so this is not ethical. This is ethically, this is not good. Now this is not good. Okay, you are sending the patient without fully recovered them. Okay, they would come again. Now they are saying that since the patient is not fully recovered, he will come again to the hospital for the admission, and the rate is 3 to 5%. Means there are probability that 3 to 5% patient will come again to the hospital. And the patient, if the same patient will come again to the hospital, it will consider as readmitting. Okay, so it means that 300 additional patient out of these 15,000, 300 additional patient will come to the hospital for the treatment. Okay, now the company is saying the company has to spend 25 lakh more to accommodate this increased readmission. If you are implementing this plan, there is some problem. If you will implement this plan, the patient will not be fully recovered. So 300 patient will come more, 300 additional patient will come. On that, you have to incur the variable cost, which will be your cost. Okay, on 300, you have to incur the variable cost. What is the variable cost here? 500. This will be your variable cost. Sorry. On these, the patient, those who are coming to you, additional patient those who are coming to you, on that, the company is spending 25 lakh more to accommodate them. Okay, the company is, sorry, this is not variable cost. The company is incurring 25 lakh more expense to accommodate them, to increase this readmission. Okay. But the consultant has found bliss in disguise in this. He said every readmission is treated as new admission, so it would result in additional cash flow of 4,500 per patient in the form of admission fees. Now he is saying that, see, he is saying that if 300 more patient will come, it will consider as readmission and we will get more money. Okay, we will get more revenue. Okay, so this will increase our revenue. So since they are saving money at this place and they are increasing their revenue from all those 300 patient, additional patient, those who are coming to you, and the money is 4,500. Okay, so these are the saving you have. from the proposal, and the cost which you will incur is 25 lakh. This is the cost which you will incur in order to earn this revenue. Now, first you have to find out whether this proposal is financially good or not. Whether this proposal is financially good or not, first you have to find that. Okay, you have to find the proposal is financially good or not. Let us find it. Let us find it. See, the company is incurring cost for this proposal. In order to implement this, the cost incurred by the company, cost, incremental cost incurred by the company due to readmission, due to increased readmission. This is what? This will be 25 lakh. This will be 25 lakh. Incremental cost due to readmission will be 25 lakh. Then saving, let us consider the saving. The organization is having saving from these days. Company is saving 0.5 days. They are reducing the package from 2.5 days to 2 days. Okay, so they are saving the variable cost 500. Okay, from 15,000 patient. So this is the saving. What is the value? This is the saving. And one more saving the company is having here. One more saving the company is having here is what they are saying. 300 more patients are coming. Readmission. Fees recovered from the readmission. Okay. Fees recovered from readmission. Okay, the fees they are recovering from the readmission. What are the fees that they are recovering from the readmission? 300 patients are coming to them for the readmission, and from each patient they are recovering 4,500 rupees. 4,500 rupees. So the total fees which they are recovering is 13,50,000. So this is the saving they are having. This is the cost they are having. So the net benefit they are having net benefit. Tell me the value. What is the net benefit they are in? I hope you understand. They are having the saving from reducing the number of day of stay of the patient. They are having fees. They are increasing their revenue from the fees recovered from the readmission of the patient. Okay, so this is their saving after implementation of this proposal. But for the implementation of this proposal, for the accommodation of this increased readmission of 300 people in the hospital, the hospital has to incur incremental. See, incremental means the organization is already having some cost, but due to this proposal, the organization is incurring some more cost, is incremental cost. Because of this proposal, the organization will have to incur 25 lakh more cost. Why are we considering this incremental cost? Because for the purpose of decision making, we will consider only the incremental cost, means the cost which the organization is incurring because of this proposal. Okay, we will consider only those costs. What is the net benefit here? Tell me quickly. The net benefit the organization is having here. And tell me it's clear or not. Tell me it's clear. Quickly tell me, this is clear to you, net benefit. What is the value of net benefit? Give me the value of net benefit quickly. This value is 26 lakh. Okay, I hope it is clear. Okay. Now see, we are having benefit with the help of this plan. The organization is having benefit. So good to go. है ना? Financially, this is good to go. है ना? Financially, this proposal is very good. The organization, after implementation of this proposal, the organization is having profit. So good to go. Now tell me whether the organization should follow it or not. Whether the organization should follow this or not. Tell me quickly. Whether the organization should try to implement this plan or not. Okay, see. Financially, it is beneficial. Financially, this plan is good. Okay, because the organization is having benefit. Okay, financially, this is good. Why good? Why good? This plan is good because the organization is having benefit from this plan. Cost is what? Cost is this. For the purpose of implementation, cost is this. Okay, this is the cost the organization is having. And the saving the organization is having, you can say 2.5 minus 2 into 500 into 15,000. And another saving revenue from the readmission, 300 readmission, and the revenue is 4,500. 4,500. Okay. So good to go. But see, if the organization will implement this plan, now tell me quickly, actually I'm waiting for you to tell me whether the organization should implement this plan or not. Okay, so Ambika is saying, ma'am, financially it is good to go, but ma'am, consider the financial factor na, because this is the strategic cost management. We are not studying traditional cost management. This is strategic cost management, and in strategic cost management, we consider the long-term perspective. And for long-term perspective, we have to consider the both financial and non-financial factors. Though financially this proposal is good, but non-financially this is not good. Why? Because this will increase the patient dissatisfaction. Patient is going out of the hospital without being fully recovered, and this will increase the dissatisfaction among the patient. And we know that the customer is king. We have already studied customer is king. Keep them happy. For the hospital patient or customer, they should keep them happy. Keep your patient happy. So this will impact the goodwill of the organization. If you will send them without being fully recovered, it will impact the goodwill of the organization. It will impact the brand of the organization. Okay. And one more point, ethically also this is not good. You are a doctor. Okay. You are running hospital. Okay. So you must follow professional ethics. Okay. You must follow professional ethics. So if we will consider the professional ethic, again, this is not good. You are sending your patient without being fully recovered, against your professional ethics. Don't do that. Okay. So I hope you understand that how the questions are different here from the question which you have studied in traditional costing. The questions are completely different. I hope you understand. Okay, now let us do another question. Let us do one more question. If you people want a break, let me take a break. And in between, I expect all of you to read this question. Okay, I'm taking a break of 5 minutes. And in between, I expect all of you to read this question. Okay, and we will discuss this question after the break. Read this question. Very good question. This is all these questions are from your book. Okay, all these questions are given in your book. You can see. I want all of you to please read this question. And we have a break of 5 minutes. Read this question. I want all of you 5 minutes. Give it a complete read. Always remember, read the question very carefully. Very carefully. Each and every word is important. Each and every line is important. Read them very carefully. Okay. See how everything is given in the question. If you will read the question, you will write the question in better way. Okay. So please read it carefully. I'm giving you time 5 minutes. In between, I'm taking a break. Okay. But I'm expecting this from all of you to read it. 5 minute break, but I will expect all of you to read this question during this break. Okay. Okay, I hope you have gone through this question. Tell me quickly if you have done the reading of this question. Tell me quickly. You have done the reading of this question? Please tell me quickly, you have done the reading of this question? I'm trying to find. Quickly tell me you have done reading. Okay, so we have a school canteen. They are talking about a school canteen. Mr. S, he manage Mr. S, he manage school canteen, and there are approximately 1600 students. Okay, and the school canteen is at Noida. The current cash payment system requires 3 clerk. Okay, so the school canteen, it requires 3 clerks. Okay, paid 90 rupees per hour. Okay, they pay 90 rupees per hour, and they have employed for about 4 hours a day. Okay, so they have to keep these clerk for 4 hours in every day, and for 1 hour they are paying payment to the clerk rupees 90. Okay, and there are approximately 16 students will come to this canteen. Okay, now next, the canteen operates approximately 240 days a year. Okay, so this canteen, it operates for 240 days in a year, not 365 days. Okay. Now the next point. Next point. S is considering a wireless cash management system. Now the organization is trying to consider the wireless cash management system. See what happened previously. They have three manager, they were sitting there, and whenever student orders something, these manager, they take the money, and then they deduct the money, and they return the balance money to the students. That will take time. Obviously, when you go and when you place an order, okay, they will calculate the amount, okay, and then they will take your money, and then they will return you your money. So this will take time. Okay, so that is why there is need of three different clerk. Now what happened, instead of collecting cash like this, they are trying to implement cash management system, wireless cash management system, where what will happen, instead of paying the money, see, you are paying the money, he will deduct the money, then he will return the balance money. That will take time. So in order to save that time, they are implementing this. And with the help of this, the student will just show their ID card, and from the ID card, the amount will immediately deducted. Okay, so there is no need to take the money, then collect the remaining money and to return it. You can reduce that time and efforts. Okay, so this wireless cash management system will reduce that time. Okay, now for the implementation of new system, you need to incur cost Fixed cost means you will implement machines. For that, you need to incur a cost of 1,25,000. You need to incur the cost of 1,25,000 to set up. Then every year this machine will run for 5 years, okay, and every year you will have to incur operating cost on these machine, this wireless cash system. You have to incur 36,000. You have to incur this cost. S believes that he could manage one clerk if he were to implement the system. Now they are saying that instead of three managers, three clerk, instead of paying the money to three clerk in the new system, it is enough to pay money to one clerk. It is enough. One clerk can manage the entire system. Okay, and the life of the machine is 5 years, means the operation will, this will operate for 5 years. Okay, this will operate for 5 years. This will give you benefit for 5 years. Okay, so you will earn the money from this for next 5 years. Now you have to find out, you have to find whether the implementation is good or not, whether the proposed system is good or not. You have to find it. Okay, first what can you do? The present system, this is the present system. In case of present system, you can see that there are three clerk. To those three clerk, you are paying money, what, 90 rupees to each clerk for 1 hour, and the clerk will operate for 4 hours and they will operate for 240 days. This is what you will pay to the three clerk, the total amount which you will pay. And while in the proposed system for the next 5 years, what are the costs which you will incur? Okay, I will multiply this with 5 also, so that I will get the value for next 5 years. And for the proposed system, you will see the total cost is this, then the operating cost will be this, and there is a requirement of one clerk. So one clerk will work, okay, you will pay them 90 rupees for every hour. And how many hours he will work? He will work for 4 hours. Number of day he will work for 240 days. है ना? For 5 years. So in this way, you can do the calculation for the present system and the proposed system, and then you can find which proposal is better to implement in the organization. Advise, you have to advise on the choice of plan, assuming the working life is this. You have to ignore the time value money, because we know that it is applicable while taking such decision. Tell me the answer. I'm waiting for your answer. Quickly tell me. Yes, you can solve this with incremental cost approach also. Quickly tell me. I'm waiting for you to give me the answer. Quickly tell me what will be the answer in both the proposals. What will be the answer for both the proposals? Give me the answer quickly. I'm waiting for you to give me the answer. What will be the value at this place? You can solve, I think this value is 1296. Okay, and what will be the value at this place? I think the value at this place is 737. Okay, this is the value which you have at this place. So which proposal is good? If you will see this proposal, which proposal? Implementation of wireless cash management system is good, both financially and non-financially. Okay, this proposal is good to implement. You will incur a benefit, cost benefit of what amount? The difference is what? 559. This is the benefit which you will incur if you will implement wireless cash management system. Good to go. You can implement it. Okay, advise them. It's good to implement this plan. Okay, thank you. Okay, Chavi, she gave me the answer. She is giving me the answer. Okay. So I hope this question was very easy. Okay, but always remember while writing the answer, always see whether you have to write, whether you have to check this, that the proposal is financially, not just financially, but if there are some point which is related to non-financial factor, you should check that. Okay, and you should write accordingly that yes, financially this proposal is good, non-financially also this proposal is good, financially, non-financially, considering both thing, this proposal is good. Okay, you can write this way. Okay, I hope you have done this question. Shall we proceed forward? Okay, I got answer from Ambika. Okay, चलो जी, ठीक है. I hope this concept is clear. Now let us proceed forward. आगे चलते हैं. Next question. ठीक है. Now let us do the next question. Yeah, one more question. This question. Okay, I want all of you to read this question. Yes, this question. I want all of you to please read this question. This question is again from your book. Open your book. You can see this question is there in your book. Read this question. I'm giving you time to read this question. Please read this question. Yeah, please read this question. I'm giving you time. I hope the previous question is clear. If you have any doubt, you can ask me. The previous one is clear. And if you have any doubt, you can ask me. Very easy question. Okay, now this is a quite lengthy question and I want all of you to please read it at your own. Okay, read it. Then we will discuss. First, apply your own brain. Okay, then we will discuss. Okay, our Rohitha from Chittor, he's asking me a question, ma'am. In case of wireless cash management system, one clerk will work for whole day and increase payment. Yes, see, it is given in the question that previously three workers were working, and in wireless cash management system, you have what you have done. Instead of collecting cash from the student and returning the money to them, it will take time. Now, see, make a picture in your mind. Okay, what if you have ever observed in your school canteen or college canteen, you can see that if they are collecting money through cash, it is very difficult for them to collect money from so many students. Collecting the money, deducting the money, and returning the money, it will take a lot of time. It take time. Okay, it take time. Instead, what they have done in wireless cash management system, they are not collecting the money, deducting the money, and returning the money. They are not doing this, because for that they need chiller. Okay, they need small denomination of money. Okay, instead of doing that, that will take time. Again, finding 1 rupee, 2 rupee, 10 rupee, it is difficult to find money. Instead, they have created ID for the student, and the student just show the ID. From that ID, amount will deduct itself. So this will reduce the efforts of the people, those who are actually working. So previously, three cash clerk were required. Now they are collecting the money through card. So now less effort is required. So if less effort is required, so there is less employee requirement. Okay, so that is why they removed two clerk, and now they are managing the things with just one clerk. So the cost of one clerk will come under wireless cash management system. Okay, I hope it is clear. Read this question. I want all of you to read this question. Always, whenever you read the question, try to make picture in your mind. See, I have one more question. Where is, okay. Wait. I have this question somewhere else also. Yes, I want to show you something. Read this question. I want to show you something along with this question, so I'm trying to find that. Okay, wait, just wait. Okay, the picture is not here. I think if I have, yes, I have this picture. Please read this question. Actually, I want to explain you this question with the help of a picture that will give you more clear explanation, that will help you to understand this question in a better way. So I'm trying to insert a picture. Wait, just wait. Please read that question. We will discuss this. I want to show you this image. And with the help of this image, we will understand. We will try to understand the question. Okay. See, remember. Before understanding this question, I want to tell you one thing. For example, we are working in airline industry. You know that Indigo company? You know this company, Indigo? You know about it. Okay? You know about this company. Now see, Indigo company, they have many planes, not just one. They don't run one plane. They have many planes. Okay. So they have their ground staff also. Like you can see here, the people, those who are there in the trolley with Indigo symbol. So they are their staff. So they have their ground staff Okay, they maybe have some place where they keep their planes. Okay, so Indigo is a very big organization. In that big organization, they run different plane. Okay, they run different plane. Now remember, before reading this question, remember the organization will incur various costs. First cost, there are some costs which are related to the entire organization, the entire Indigo company. There are some costs which are related to entire company. This entire Indigo company means the ground staff they have. Okay, okay, the entire organization. This is the fixed cost, for example, the fixed cost of the entire organization. And for different plane, they were incurring different expenses. For example, they have plane 1, plane 2, plane 3. For different plane, they are incurring different expenses. So for these plane, they may have some fixed cost and some variable cost. Okay, so remember, these fixed costs can be of two type. One fixed cost which is related to entire Indigo company, entire organization's fixed cost. Another fixed cost is related to plane. If my this plane will work, this fixed cost will remain with this plane. Okay, this is the fixed cost of this plane. Okay, so this cost is fixed for this plane, but it may vary for the entire organization. If you will increase the number of plane, okay, this fixed cost will increase. If you will decrease the number of these planes, the fixed cost per plane will decrease. Okay, remember these 2 points. I just want to tell you these 2 points. Before understanding the question and the solution, you need to understand this point. Okay, now read this question. Now read this question. See what happened in this question. There are some problem in this question which we have to discuss. There are some problem in this organization. If you have any doubt, you can ask me in between. See, now what happened in this case, remember, what happened in this case, the organization is taking the total revenue. Okay? The organization is taking total revenue. Okay? The organization is taking the variable expenses and the organization is taking the various fixed costs. Now, for which they are discussing this about the information of a plane. One flight, one plane. See, let us read the question. Golden Pacific Airline Limited operates its service under the brand of Golden Pacific. The Golden Pacific route network span prominent business metropolis as well as ski leisure. Okay, this is not relevant. The Golden Pacific, a low fare carrier, launched with objective of commoditizing air travel, offer airline seats at marginal premium cost. Okay, low fare cost. They're providing low fare cost. Okay, now the profit of Golden Pacific have been decreased for several years. Okay, see, they are talking about the entire organization first. What is the work of the entire organization? They're first talking about the entire organization. Entire organization, Golden Pacific Limited. Okay, they are saying that for few years their profit is decreasing. Okay, now they are trying to do the analysis why the profit is decreasing for the organization. Okay, so for example, Indigo, big organization, and they are trying to find out the reason why the profit is decreasing so much. Let us try to find out the reason why the profit is decreasing. So for that, what they have done, they're trying to put effort to find out the reason why the profit is decreasing. So in an effort to improve the company's performance, consideration is being given to dropping several flights that appears to be unprofitable. Now see what the organization is trying to do. What the organization, the complete organization is trying to do. They want to quit some of their flight which is not profitable. They want to drop some of the flight which are not profitable. Okay, they are trying to find the flight which are not profitable and they want to drop it. Not profitable, let us drop it. So for that you need to do analysis. They have done an analysis on one flight, okay, which run between New Delhi to Leh, and the flight name is GP022. In this way, they have given this information of one flight, one plane, which run, I hope the spelling is correct. Okay, this flight, it run from Delhi to Leh, this one flight. Okay, they are talking about this one flight. Now they are saying that, see, they are saying that this profit, they are incurring loss in this profit, and therefore they want to drop this flight. Okay, they don't want to do work related to this flight. They want to drop it. They want to drop it. They want to drop this flight because they are saying it is not profitable. Now see, before taking any such decision, you should first consider whether the calculation is correct or not, whether the way they have calculated the profit of this flight is correct or not. For that, what will you consider? See, we will consider only the relevant costs. We have already discussed, if you are taking the decision related to business organization, you will just consider the relevant cost. You will not consider any irrelevant cost. Now, what are the relevant costs? Relevant costs. What are the relevant costs? For every flight, what are the relevant costs? We will consider here all the variable cost which is related to flight and all the fixed cost which is related to this flight only. We will not consider the fixed cost of entire organization. We will not consider. See, we have already discussed there are two types of fixed costs: the fixed cost for the entire organization and the fixed cost related to that particular flight. Okay, so we will consider all the variable costs which is related to this flight. We will consider all the fixed cost, okay, is related to this flight. And what will we not consider here? We will not consider the fixed cost of the entire organization. Why, ma'am? Why don't you want to consider the fixed cost of entire organization? See, whether you will drop this flight or not, whether you will drop this flight, you will sell this flight to some other person, you will drop this flight or not, the organization will keep incur these fixed costs. This is fixed in nature. The running of this flight will not affect these fixed costs. These are fixed in nature. You are running one flight, two flight, 10 flight, 100 flight, 200 flight, no matter. 1, 2, 200, no matter. This fixed cost of organization will remain same. So if you want to take the decision related to this one flight, you should not consider this fixed cost because this will remain same. Whether you will drop this or not drop this, this fixed cost will remain same. So it means that this fixed cost is not relevant for you. Which fixed cost you will consider? You will only consider those fixed costs which are related to this particular flight, because in case if you will drop this flight, you can save that fixed cost only. If you will drop this flight, you will save that particular variable cost. I hope you understand. I hope you understand. Okay, I hope you understand. Okay, so you will not consider the fixed cost of entire organization. You will not consider that. Okay, ji. Now, one more thing, since it is given here, there are some costs which is related to entire organization which you don't need to consider. One more cost, if there is any past cost, any cost which is related to the past, you have already incurred that cost. You cannot save money from that. Okay, I have already paid money, avail the services or purchase the product. Now we can't help it. Okay, we have already incurred the cost. It can't help us. So It's of no use to consider such past cost which you have already incurred, which is nothing but sunk cost. You don't need to consider them. Sunk cost, not need to consider them. Okay. Now see in this question. Let us read this question. Let us read about this question. These two costs, we will try to identify these two fixed costs and we will remove them. What will we do? We will consider the sale value, whatever the sale value they have. We will consider the variable cost. Okay? And then we will consider only those fixed costs which is related to this particular flight. Okay? Now see, what are the costs which is related to this particular flight? Wait. You can read. I want you to tell me the fixed cost which is related to this particular flight. Can you help me? ठीक है जी. I want you to please give me. I want all of you to please try to find out the fixed cost which is related to particular this GP 022, this particular flight. GP 022, this particular flight. The cost which is related to only this flight. For that, you have some information with us. What are the information we have? These information. We will consider these information. First information, member of flight crew are paid fixed annual salaries. Okay. Whereas flight assistant are paid by flight. Now tell me, out of this, which cost is the cost of the organization? And which cost is the cost of the flight? Can you give me the answer? I want you to give me. I want you to tell me the cost which is related to this flight from the first point. Member flew crew. This is the salary of member flew crew. Okay? Whereas the flight assistant cost which is related to particular flight is this. Okay? Cost related to GP022. Cost related to GP022 is flight assistant salary. This flight assistant salary. Okay? And we will not consider this flight crew. Okay, ji? Okay, you got it or not? Please keep replying me. Otherwise, it's like I'm teaching to a board. I'm teaching to laptop. Just I'm teaching to laptop if you are not replying me. Okay, so we will consider this flight assistant cost. Let me write this cost. Let me write it here only. Flight assistant salary, which is nothing but, what is this? This is flight assistant salary is 31500. Okay, ji. What is the contribution? Sale minus variable cost is contribution, which is 588. Okay, ji. Now next point, second point. Baggage loading and flight preparation expenses is an allocation of ground crew salaries and depreciation on ground equipment. Okay, so see, now next is baggage loading and flight preparation. Now they are saying this cost is the crew salary, the entire organization salary. This is related to entire organization, not related to a particular flight. This cost, baggage loading, okay, the place where you load the baggage, okay, or prepare the flight for takeoff, okay, all those expenses is ground expenses, okay, means the expenses of entire organization, this expense. So we will not consider this also. This is organization expense, we will not consider it. ठीक है जी. Next, overnight cost. See. Sorry. Next point. Third point. 1/3 of the liability of insurance is a special charge assessed against GP. They are saying that out of the entire insurance cost, where is the insurance cost? Liability of insurance. They are saying out of this insurance cost, only 1/3 is related to flight. So insurance, how will you calculate it? 147 into 1/3. So from here you will get the insurance cost. ठीक है जी? What will be this value? Tell me. No reply. Give me this value. ठीक है? Insurance, you will consider this value is what? 3,1500? No. What is this value? Please give me the value. This value is 49,000. ठीक है? This is 49,000. Next point. The hangar parking fee is standing fee charges for the aircraft at all airport. Okay, so this is the standing, the place where you kept the flight. Okay, so it depends on the number of flight. If you will increase the flight, you need more space to store them, and so you need to incur more cost. So this is the cost which is related to your the hangar parking fee is standard fee charged for aircraft at all airports. This is the standard fees they charge. Okay, so we will not consider it. We will not consider this. Okay. Next is if GP is dropped, the Golden Pacific airline has no authorization at present to replace it with other flight. Okay, ji. Now see the cost which we will consider. They have given us the information related to this, the information this, and where I have ticked it with red color. These costs. Now let us talk about the overnight cost of flight crew and assistant at destination. We will consider this. ठीक है? Fuel of aircraft, we will consider this. ठीक है? But we will not consider the depreciation on aircraft because we have already purchased the aircraft. We have already incurred the cost on aircraft. So we cannot save the money on that. Okay, so we will not consider the depreciation cost. It is a sunk cost. ठीक है जी? So we will not consider that. ठीक है? So first, after these two costs, what will we consider? Overnight cost of flight crew, which is 1,600. Then what will be considered? The fuel of aircraft, which is 2,38,000. Then the liability insurance cost we have already discussed. We have already considered this. And flight promotion charge. ठीक है जी? If no information is given, we will consider that this cost is related to a particular flight. ठीक है जी? We will consider these information, and after subtracting it, we will find whether you are incurring profit or loss at this place. Tell me. Waiting for your answer. Whether you are incurring profit, gain, or loss at this place. Calculate this and tell me the answer. Whether you are incurring profit or loss at this place. This is clear to all of you? Always remember, whenever we are doing the question which is related to relevant cost decision making, we will not consider the sunk cost. We will consider the cost of a particular proposal. This is a particular proposal, whether the organization should drop this flight or not, a particular proposal. Okay, so we will consider only those costs which are related to this particular proposal. Okay, only the cost which is related to this particular proposal. Give me the answer. I'm waiting for you. Okay, Ambika is giving me answer. Why not other student? Why not other student? Okay, tell me whether this chapter is clear or not. Quickly. This is tell me quickly, clear or not? Whether it's clear or not. Any doubt? You have any doubt, you can ask me. If you have any doubt, you can ask me. Okay, no doubt. Okay. So this is the topic which we have covered, few of the topic. I hope it is clear to all of you. I hope it's clear to all of you. Okay, always remember there are two types of costs. One is the cost of entire organization and another is the cost of a particular proposal. While doing the question, we will consider only the cost which is related to proposal. Okay, we will not consider the cost of entire organization, the fixed cost of entire organization. We will just consider the cost which you are incurring, the variable and fixed cost which you are incurring related to particular proposal. Okay, I hope it's clear to all of you. So we have done the topic. I will cover this topic in next session and we will cover the remaining topic. Let me show the topic which we will cover in next session. We will cover these topic, some application of the CVP analysis on outsourcing decision, sell or further processing decision, right? All these decisions, we will study about it, okay, in next session. And one more thing which I want to share with you all is this, okay, this. Okay, this is the same thing. While you are taking the decision, what will you consider? You will consider the relevant cost of the proposals. Okay, but what happened previously in your old traditional costing, you take decision here. Okay, you take here the decision at this place. Okay, financially you consider whether the proposal is good or not financially, and you take the decision. You do not consider the non-financial factors. They have introduced one more point that while taking the decision, always consider the financial as well as the non-financial proposals. Okay, so in case read the question, okay, thoroughly, try to find out, okay, all the reasons why. With the help of calculation you can easily find out that whether the financially the proposal is good or not. But while reading the question, try to find out that whether it is given in the question somewhere that you have to consider while writing. Okay, and the point which is related to non-financial perspective. Okay, you should try to find out whether the information related to non-financial perspective is given or not. You will consider that and then you will try to find the answer. You will write the answer. Okay, if you have any doubt you can ask me. Otherwise, anything you want to ask me, you can ask me. Otherwise, let us finish this session. Ambika, your doubt is not clear to me. Okay, see, read the question carefully in the examination. See, I keep on saying this thing. Everything is given in your question. Okay, read each and every word carefully. Okay, everything is given there. Okay, read everything, the question very carefully, and it's very easy to write the answer. Okay, then it's very easy to write the answer. So, good night. Good night, all of you. Ramya, okay, more doubt. Let me take the doubts, okay. Okay, so Ramya is asking me from Tiruvananthapuram, she is asking me, Madam, can we consider the cost that will still be incurred by the organization to make decisions? See, Ramya, we have already discussed what cost we will consider for any proposal. See, they are discussing for the proposal now. Just consider the cost, the variable and fixed cost, which is related to the proposal. Okay? If you will drop the proposal, you will save that cost. If you will consider that proposal, you have to incur that cost. Okay? Only the cost which is related to proposal, and any cost which are not at all related to your proposal, means whether you will accept the proposal, whether you will reject the cost, whether you accept the proposal, whether you reject the proposal, you have to incur such cost, and you have to keep incurred this cost in future also. Okay, such cost is not relevant for decision making. Okay, this is not, for example, we have discussed the entire organization, the cost which you are incurring for entire organization. If you are talking about any particular proposal, the cost of entire organization is not required to consider. You don't need to consider the cost of entire organization if you are talking about a particular proposal. Okay, I hope it is clear. Okay, any doubt? Keep it in mind. Okay, it's a very, these are very small points, but generally these points we ignore. Okay, any other doubt? If you don't have any other doubt, let's say goodbye. Good night. Take care.